Recording in progress.
I know. Do you want to leave? So, just make sure we're good here. All right, I'll stand over here so that way we can see all this.
Yeah.
I know. So Matt's gonna be doing a lot of the talking today because it's on lending. So as far as if you're a newer agent getting into it, you want to know some of what Matt's gonna be talking about because you're gonna be really the point of contact for your client and they're not always available. You really just kind of have to know enough to guide them through the process because the lending for the buyer is gonna be the scariest part. So we'll let Matt take over and I'll only interject if I absolutely have to.
All right, well, my name is Matt McDonald. I'm a loan officer at Premier Mortgage Lending. We're in Salem, New Hampshire. Obviously, we're going to go over the lending process today. Just a quick overview. Like I said, loan officer for Premier Mortgage Lending. I'm licensed in Mass, New Hampshire, and Maine, and we're soon to be licensed in Florida, so a couple other states. And I graduated from Brown University in 2019. So I'm still newly out of school, kind of eager to be successful. So.
You'll kill it.
All right, so just a quick overview, a general overview of what we'll talk about. We're gonna go over the types of loans. We're gonna go over some disclosures that I think everyone should really know that we have. We're gonna go over the difference between a lender and a broker, because I know a lot of people don't really know the difference between the two of them, and they are very different. The lending process in general, and then all important closing costs. Okay, so five little things there. So we're going to start with types of loans. Okay, first two are pretty much the most common. The conventional loan is typically meant for a buyer with a higher credit score, higher income, and less debt. Okay, so these loans are bought by Fannie Mae and Freddie Mac. Okay, you may have heard those two names before. They are just government agencies. Okay, they have very strict underwriting or qualification standards. We need to have at least a 45% DTI or debt to income. A 680 credit score or higher is preferred. They do have a 5% down payment minimum, and then PMI is required if you are under a 20% down payment. We'll get into PMI later. That's just private mortgage insurance. The big thing I do want you to take away from that is that it's a higher income, less debt. That client is generally what you're gonna be for that loan.
And what you may get questions about when you're submitting offers, like I have clients right now that are conventional, they're first-time home buyers, and they're all weekend, their question was, is it better that we're conventional? What about this? What about that? When you have a conventional buyer, they need like all of the reassurance they can get in this market. So I try really hard to push and say, you're a strong buyer, you're a conventional buyer. If there's other, loans in the pool of offers, you as a conventional buyer are going to stand out just on the realtor side of things.
You have a question?
In other classes, I've heard that FHA, VA loans, sometimes those, even though they have an unjustified negative connotation to them, but actually they're supposedly better because they're backed by the government and compared to a conventional. So my question is there a higher chance if there's a finance contingency in the offer, is there a better chance that the FHA will not have a problem versus a conventional?
So you're more apt to have an issue with an FHA loan on
Okay.
my side of things. So, or on our side of things, I should say. On the realtor side, it's just harder because when you have an FHA loan, there's an FHA appraisal, there's an FHA water test. So there's more hoops for the seller to jump through. So if they have another option that's easier to get through, they're going to go with that other option. However, I've had, if you have FHA buyers that aren't putting 3.5% down, he's going to talk about FHA now, but a conventional buyer is always going to be a stronger buyer in this market. When it comes more of a buyer, like a buyer friendly market, it maybe will even out, but for right now,
It's definitely conventional.
Yes.
It's like
Okay.
top tier as of
But as we get into it, if you have questions like that, we can jump in. And there's also, I know that Matt's going to talk today about the requirements on each loan for the seller, like as far as conditions that you need to meet. So sorry to hijack.
No, you're good. After that is going to be that FHA loan. So there's more lenient qualification standards. So this is generally a buyer with a lower credit score, maybe not as much money to put down for a down payment, then generally a lower income as well. Okay, these loans are insured by the Federal Housing Administration, so they are insured by the government. 55% is the DTI, 620 plus credit score, 3.5% down, and then upfront mortgage insurance. I think that's really important for all realtors to know. If you do have an FHA buyer, there's an upfront mortgage insurance that no matter what you put down, you have to pay. It's 1.75% of the loans. If you have a $100,000 loan, you owe $1,750 at closing. Okay, so it's just another upfront cost that you can't put that in a loan, but most people get surprised when they hear that, because you buy a $400,000 house, it's almost $8,000 right off the top that you're gonna owe. Okay, so that's kind of an important one for me to note there. Any questions on that one?
As far as FHA goes too, for a buyer on your side of things, they're more apt to need closing costs. Because if, FHA buyers, it's not, some of them are amazing and they're just as good as conventional. They just might have like a crappier credit score. Could be anything like that. Hi, come on in, sit down. Oh, it's okay. So as far as the FHA goes, where you see that upfront, they're kind of hit with more costs than a conventional person. So there's someone that, if it's an FHA buyer and I know that they're on the cusp and I know their situation personally, I try to work with them long-term, because you really want to set them up for like long-term success when it comes to real estate game.
Right, and this is someone for me too, where if their credit score is like 625, you're almost better off playing long game. Being like, hey, I'm gonna coach you to help get your credit score higher.
Yeah.
Because even if they can't qualify at 620, their mortgage insurance every month is gonna be through the roof. And mortgage insurance is pretty much just throwing money away, because it's insurance for the lender. It's not even insurance for them.
Yeah.
So I try to get them to pay as little of that as possible. Okay, so it's almost kind of like a strategy game with how you want to take your FHA buyer. Because if they're like a 670 credit score and they're like right on the cusp there, okay, their mortgage insurance may not be too bad, or maybe you want to get them into a conventional loan. But if they're barely on the cusp there, you're probably gonna want to talk to them and be like, hey, it's now really the time that you want to buy.
And this goes back to like what we were talking about when we had the whole buyer week a couple weeks ago, is you want to think long-term for your clients. That's how you're going to get the repeat business. It's easy to say like, oh, I could definitely get them in, the market's slowing down, I could get them in there. But if they can, through minimal effort, or if they have the time, like if they don't have to move right away, try and encourage them to, work through it a little bit longer. And you may take longer to close, you may take longer to get paid, but long-term, they're going to know, okay, this person worked with me, connected me to people like Matt, who helped me, know what I had to do. And then you get that repeat referral business. That's always been my philosophy. And I would encourage anyone new coming in to do the same.
And then just one more thing to add on top of it, to give you a perspective on the mortgage insurance, say they buy a $300,000 house and their credit score is 620, they're really probably paying $350 a month in mortgage insurance. Where if you can get that credit score up to even 660, 670, they're probably only going to pay $100 to $125 a month. So now they can qualify for a higher house because they're not paying as much mortgage insurance. They're probably going to be pretty happy because they're going to get a better house, obviously, as long as they qualify for it.
Yeah.
So MIP is mortgage insurance premium?
Yes. Yes. Yeah. It's just like, it's the same
Just wanted to
thing.
make sure
It's
that-
literally the
No,
same
yeah.
thing as
It can
TMI.
also-
It's just,
Yeah.
yeah.
Same thing.
Yeah.
It can also become an issue if they don't have a lot of money. Like they don't have a lot of cash to put down. Like a lot of first-time home buyers are FHA buyers because they're
Yeah.
people that, maybe they defaulted on their student loans for a little bit because they couldn't find a job right out of school, whatever the situation is, and now they're doing fine. It can create an issue if they don't have enough money in their pocket, which is, it's hard to save up for a decent down payment, plus your closing costs, plus all these extra things you get hit with. So, there are definitely buyers that I try to be patient with. And if I can coach them into you have to let them do whatever they're going to do. But if I can encourage them, and if they're in a situation that's good enough to kind of wait it out, I connect them to Matt or another lender and say, work with the lender. I talked to a lender I knew to, because I was in real estate, like a year or two before I bought my house. And Matt will love it because if he's going to do a $300,000 loan and then a year from now he gets a $500,000 loan, it'll be great. But
Yeah, it just goes back to you're there to, we're
Guide.
both here to guide the buyer and do what's best, obviously, for them. And hopefully they see that us not letting them buy our house, being like, hey, maybe want to wait as a good thing versus, well, they're just trying to kind
Close
of
a
shoot
deal.
me. Yeah, they're trying to
Because
shoot me.
in the real estate game, you can easily see that, I close deals, I make money, I close this many deals, and that's great. And you will definitely get there, but it's better to get there guiding your clients so that when you go to do a reseller, you don't want them to be in a situation where they lose their house and you push them farther than they should have gone. So, because I've seen that play out, in other, places that I've worked and with other agents that I've interacted with. And my advice to anyone coming into this would be to just think of the long-term trajectory of your client, which goes back to this. I could say that 1,001 times. I'm really sorry.
All right, so next, two little bit more uncommon loans, relatively speaking, compared to conventional FHA. First one is a VA loan. That's the loan that's intended for our veterans. There's a lot more lenient underwriting requirements or qualification, underwriting and qualification, it's essentially the same thing. They do have a 0% down payment option. And you've seen me or you've heard me talk about that DTI or the debt to income. There's nothing like that for VA. They use residual income. Okay, so to give an example, if you have two people in your family, I believe the number is $1,055 needs to be your residual income. Okay, how they calculate it, say you make $4,000 a month, the housing payment's gonna be $1,000. So you take that right off the top. So I got $3,000. Okay, the utility costs are gonna be this much, the taxes are gonna be this. That is the number we use for qualification. A colleague of mine actually this morning just qualified somebody, his debt to income was 70%, but he qualified for DTA for a VA loan because he met the residual income. The more people you have in your family, the higher that number obviously gets. If you have a family of five kids, you have 7 people, that residual income number is going to be pretty high. Next is the jumbo. Not a lot of people know about this one. It's any loan that exceeds the conventional loan amount for a specific area. Okay, that specific area is county by county. Okay, so Middlesex County, Essex, everything like that for Mass, that those numbers are different. Right, there's a lot more stricter underwriting standards because, especially from Middlesex County, you're talking about like $800,000 loan. Obviously, they want to make sure that the buyer is pretty qualified for that. Generally, it's a 720 credit score, 10% down payment.
And you'll definitely run into this. You know, if you stay in real estate long enough, you'll definitely run into this. I
Especially
recently ran into this in Bedford, New Hampshire, where they were borrowing too much because they were considered FHA. So it was a mother-daughter buying together. They had a massive down payment, but because their credit wasn't the best, they had to like move the loan around. And luckily, you know, I have people like Matt and I have good lenders that I've built relationships with, so I trust whatever direction they want to go with it. That's when you really need to rely on your network of people, because I would have no idea how to fix that. It's not my role to. And that's another kind of goes back to staying in your lane. You don't want to get all up in Matt's business and be like, what do you mean? You want to let him fix it because it's his lane.
Right.
But that's something you will definitely run into at times.
Right. And that's another thing too, when you talk about finding the lender that's good for you. Jumbo loans are very different lender to lender. And what I mean by that is some lenders have you take out a first mortgage and a second mortgage. Obviously, the second mortgage is going to be at a way higher interest rate. And there's some lenders that can lend you up to $2 million, $3 million on one mortgage. Can't believe I'm actually going to give a bank credit, but Chase Bank is actually really well known for their jumbo loans. They can loan up to I think it's like $1.5 million, $2 million. Like, it's crazy, right? But the jumbo loan, again, you're in this area, you're probably going to run into that a few times, which is why I wanted to bring that up. We do have another loan called a USDA loan. I didn't bring that up because there is such strict guidelines that you have to follow, and you have to make below a certain level. The house has to be below a certain number. Your
Only
credit
certain homes
score,
and areas qualify.
yeah, certain homes qualify for it. It is such a specific buyer that you would have to have, where if you do run into it, the lender will definitely help you out with that. But I figured this area, especially Middlesex County, that's definitely gonna be more important for us to know there, right?
And if you're doing any work in New Hampshire in the Bedford area, that's where I ran into it.
Yeah.
So
Yeah, Wyndham, Bedford,
yeah.
anything like that. All right, so next is we're gonna go over our 2 biggest disclosures. I think it's really important for realtors and of course every lender to know. We have a ton of disclosures that we have to give out, but the 2 biggest ones are called the loan estimate and the closing disclosure. Okay, the loan estimate is usually received after the P&S has been signed, so you have a house under contract, and this disclosure shows the estimated cost of the loan. Okay, it shows the buyer the amount of the loan, the monthly payment, interest rate, APR, the loan term, and actually breaks down the closing costs. Again, it's an estimate, but when I say that, we do have certain tolerance levels that we have to follow. So we can't just quote you $1,000 for closing costs and then 3 days before you sign your loan, it's bumping up and it's like 10, 11 grand. We do have limits that we have to go into, but it is important to know it's an estimate. Little things can change. Like for instance, we're estimating taxes in your closing costs, which we'll go over. Obviously, I don't know the exact tax number, but we're gonna get it within a certain range.
And I just want to add to this, because this is usually when you'll get a call from your client, is if they're a nervous, anxious buyer. They'll say, I just got the loan estimate and I didn't know my closing costs were gonna be this much. Oh. And at that point, I try to just say, okay, I'm gonna call Matt. Let me call him, let me talk to him. I'll give you a call right back. I also will talk to Matt. I'll say the same thing, whatever Matt wants me to tell him, because I don't know anything about the lending side of things. Matt does. So I try to just back up whatever lender I've referred to. And then I try to just say, have conversation with Matt, have conversation with the lender, and then they can kind of calm them down. I don't do a good job at calming people down on the lending side of things because I don't know lending. So I try to just refer them back to, again, the network of people that you build, because that is a point in the loan where or in the transaction where you'll definitely hear from your client if they're more on the anxious side.
Yep. And then second one is the closing disclosure. It shows a lot of the same info, but these numbers are final. So it's the exact closing, the exact APR, the exact interest rate, everything now is exact. We cannot change there. So if we mess up a number here and don't disclose something, like we forget to disclose the appraisal, we can't charge you. We lost 500 or whatever dollars it is.
So they make sure that's right.
We make sure that's right. But the important part to note is the closing can take place 3 days after this is signed. It cannot take place the next day. It can take place 2 days later. So if you have a buyer who's a little close to their closing time, you're gonna want to be like, hey.
Yeah, that's when you want to.
We're gonna want to sign this. Yeah, this is the important one to keep track of when you're.
And it will be referred to as the CD.
Yeah.
No one's gonna.
Before 3 days?
No.
So the closing can't take place before 3 days.
Is that because of TRID law?
Exactly.
Yeah, so there's a law, basically, then you need to have a certain amount of time to review that because it's your information that
And
you
it can't take place after. It's gonna be exact.
No, it can't take place 3 days or more. It can't. how
can't
do I
be
word it?
before.
Less
3
than
days.
3 days. The closing cannot.
You
take
need
It can be
place.
5.
But it can't
Yes.
be 5 days. Yes. Yes.
So if you're due to close on Friday and you don't receive that CD, like Monday, Tuesday is when I'm like, hey, are we on track for the CD or are we gonna need an extension for closing? Because the attorney will not close it.
Yeah.
They'll say, sorry, we're gonna have to push it back. And again, on our side of things, we're the ones having to coordinate that. So if I hear from Matt and the attorney, hey, CD's not ready, it's not gonna be out, buyer was late getting us info or whatever, something happened, it's gonna be late.
It's appraisal nowadays.
Yeah, the appraisal sometimes will tie things up. And I have to reach out to the seller and say, hey, we're having an issue with the CD. I try to just explain, be as transparent as I can be, while protecting my client's confidentiality, to just explain like this is a fixable issue, it's something minor, or if it's something major.
Yeah.
Hey, this is something major. I
Major,
don't know if
like-
we're closing at all.
Right.
But it's your job kind of at the
Yeah.
beginning of that week to kind of start the ball rolling and saying, okay, where's the CD? That's why you'll see a lot of realtors around here with whiteboards everywhere, because it's our job to kind of just like pull the whole thing and tie it up. And so on Matt's side, he'll communicate with you, the attorney will communicate with you, but you have to communicate all that information to the seller and just reassure your client, because they will always call you. Even if they call Matt, they'll call you because you're with them all the time. You're the only person that they really see face to face. So they could talk to everyone and they were going to want to hear the same thing from you. So just be ready to reassure everyone.
All right, so kind of an example of what the loan estimate looks like. Obviously, I don't need you to remember all of it. Just kind of wanted you to actually see.
Oh, it's
what-
good. It's
what
good that you're showing.
What it's looking like. It's all, first section is just a lot of basic information, where they're buying the house, sale price, their actual name, the loan term, if they're purchasing or refining, I say basic information, all the loan information. So at the top, then you have your loan term, so the loan amount, the interest rate, the actual payment that they're gonna make on their principal and interest, is there any prepayment penalty? All the information that they could possibly ask for, okay? Your projected payment, so it actually breaks down your monthly payment, okay? I'm a visual person. If I heard over the phone what my payment was, I wouldn't really remember, so I like that it shows it. Costs at closing, okay, we're gonna go more in depth, obviously, with that later. Estimated closing costs, estimated cash to close, 2 different numbers, gonna be really important. Obviously, we'll go over to know that. Actually breaks down the closing, and then any comparisons, other considerations of the appraisal, late payments, servicing, everything there. So it's really just a broad breakdown of your loan, so you can see everything. So when I tell people, trust me, you're gonna see everything in your loan, and they don't believe me, that they get the loan estimate, they're like, oh.
Yeah.
And it's like, or it's the other way, like Sarah was saying, you see it, and then
They
it
need you
kind of
to,
starts panicking.
Yeah,
They're
they
like,
start to
oh, this
freak
is
out.
almost getting real. Like, oh my God. So then I put what the example of a closing disclosure is. Okay, this one is a 5-page document. Okay, a lot of it's the same information up top, same with the loan terms, same with the projected payments, costs at closing. So that first page is essentially the same thing. Okay, we get way more in detail for your closing costs. So we have to show exactly what you're paying for, not just, oh, you're paying $2,000 for prepaids. We need to show exactly where your money's going.
Can I
Right.
jump in here really quick? So if anyone was here for the negotiating week, all that, the day, how we had to kind of deal with, things day of closing. Every time we change something with the numbers day of closing, this has to be changed. So Matt needs to know and the attorney needs to know. And that's why it becomes so much of an issue, because it's like, all right, like we have to have this out, we have to have it ready. And as far as the CD going out 3 days before, it doesn't have to be the final, it just has to be the draft, or does it have to be the final?
So if you
So-
make a change on this, you gotta wait.
I mean, maybe they cheated on my deal because we closed the same day. Well, actually, I think we went on record the following Monday. So we signed, and they usually have some sort of gap paperwork that you sign so that everyone can move in, and then we get on record after the fact.
Yeah.
But this is something where I just wanted to show you, because this is everything that they're working on. And so whenever your clients are starting to kind of be like, well, I want you, like, and they get all huffy and puffy, you really want to try to de-escalate, because what seems like a minor change is obviously not. All of this has to change, and it takes time on the lender side, takes time on the attorney side. It just creates kind of an issue, but you gotta do what you gotta do to save the deal. Like we learned in negotiating.
I'd rather close a little later.
Yeah, but not close
Honestly,
at all.
even into the next month.
Yeah.
So I was okay with it, than have it completely blow up.
Yes.
200
Yes.
Right,
yes,
I'd rather figure that.
Yes.
But again, breaking down closing costs, breaking down calculating cash to close, again, that's a really important number for buyers to know. Summary of your transactions, so that's a lot of like taxes and stuff like that. New Hampshire has transfer taxes, a lot of people don't know that. That's another, again,
Shocking.
fee to add audio. I know New Hampshire, real
Yeah.
estate.
I don't know
taxes.
if anyone here is licensed in New Hampshire, but if you ever decide to and you go from Mass to New Hampshire, that's usually the kind of buyer that will be like, what is happening with my
Yeah.
closing costs? Because you have to pay a lot upfront in taxes.
Yeah.
So that becomes an issue.
Yeah.
That's the same as the stamps.
It's like the tax stamps, it's like what they are, yeah.
Yes.
Crazy.
Just way more expensive.
Significantly.
So, sorry.
Oh, no,
So
go back.
Like if a seller is paying for some of the closing costs, would it be like a credit in there saying
Yeah,
that the?
Exactly,
Yep.
exactly. That's where the seller gets issue.
And at closing, you'll have to sign some form of this. It's called the Alta. And so when you have closing, our office keeps a copy. So you'll have to have that to close. And I'm pretty sure it has like basically all of the same information on the Alta.
I actually don't know. I didn't.
Oh, I think it's literally the same thing. It's just the closing disclosure. And every party has to sign that's there. So each agent, and I don't know if we necessarily have to sign it. Some attorneys make me sign it, some don't, but you need a copy of it. So when you're at the closing table and they're signing that CD, we call it the Alta, just say, hey, can I, is someone gonna send me a copy of the Alta? You don't even know what the hell, you don't even know what you're talking about. You don't even know what it looks like. You just need to say, someone needs to give me a copy of the Alta so I can get paid. Yes, I need to get paid, so I need the Alta. Please help me. I need a drink too, because this deal is hard. Okay.
This would be a good time to rag over banks too, because I love to do that whenever I
Yes.
can. The loan estimate, there's a lot more tolerance, like I said. So for like taxes and insurance, they don't have to disclose all of it. They have to disclose a minimum of 2 months. So they'll see that their closing costs are X. Every bank does it. They show you 2 months that your closing costs are lower. So you're like, oh, I'm gonna go with you. And then you get this, and in New Hampshire, it's 6 months
Mhm.
at $800 a month.
It's similar
It's
to
like,
a Redfin
what is
situation. where it's
going
1%, but
on?
It's not really 1%, so it's our side too.
Yeah, it's, and again, that's just where I'm gonna keep stressing, find a lender that is working and helping your buyers.
And you have to, because I'm in a situation right now, that's why I have my phone right here, because I have a financing deadline of tomorrow, and the lender said, oh, I need an extension. And this was a pre-market listing, so we did put it on the market. Someone bought it at a yard sale. They went through a lender, Citizens Bank, bigger bank. They have really strict, harsh, policies within the bank that they don't make exceptions for. And his word for word, he said to me, if it's not gonna change the closing date, why do you care? Because if I need to know what conditions are remaining on the loan for my seller, because if it's just the appraisal, okay, you can get an extension. If it's the appraisal, if it's their, they need to do
income's on
more
that,
incomes, change it, or if they haven't vetted the buyer at all, like I wanna know, I need to know so I can guide my seller in the right direction. So as far as on the buyer side of things, you wanna make sure that you're connected to some lender that you trust so that you can have clear communication, because I don't know this lender, and bigger banks tend to wanna just remove the realtor altogether. And it makes it very difficult for the client.
What was that comment about Bedford?
Well, Redfin is similar to bigger banks. Like if they're saying, oh, we only charge 1%, we only charge 1% fee. That's not the case in Mass and New Hampshire because it's customary for the seller to pay for the buyer's representation. So yeah, sure, you can put it on and you can put it in the MLS and offer to pay the buyer's agent nothing. And realistically, the buyers aren't going to be comfortable going in without representation. So that Redfin agent's going to show up to the table and say, oh, you're only paying Redfin 1%, but you have to pay the buyer 2%. So it's really a 3% commission.
Okay.
It's not one. So
That's
it's kind
different.
of like a situation. So if someone says to you, well, why wouldn't I go with Redfin? It's only 1%. This is not the case. It's not the full picture. Seller is on the hook for paying the buyer's representation.
That's
Sure, you
exactly
can
why I
tell the
asked.
buyer. Yeah, you can tell the buyer that they have to pay for their own representation. And then they're not going to want to buy your house because they're not going to have the money. No, they have to pay for their down payment. They have to pay for their closing costs. There's a reason why the buyer doesn't pay for their own representation because they're having to come out with all the money up front in the beginning. So why would they, it's reasonable to think that the seller would cover the representation overall. So that 1% Redfin thing,
Thank you.
your argument is they have to pay for the buyer, it's not 1%.
And
Maybe you save a point.
And therefore you lose potential.
You do.
buyers.
Your house isn't being marketed to the best it could be. Sure, you can think it's, sure you have like 8 people on your team, but when you're talking to 8 different people and none of them are communicating, have a blast. It'll be
We're
fun.
gonna do it a little later, but like Quicken Loans,
Ugh.
Rocket Mortgage, they do the same thing with me essentially. We'll get into it when we actually get to like that section where it makes sense what I'll say.
Yeah.
But it's annoying. It's like it's not what you're advertising is
It's
not
not
true.
accurate.
I don't know how they can get away with it. It's like
Yeah.
it's not.
There's
it's
usually
not
an
true.
asterisk next to
Right.
the 1%.
And it's the most vague asterisk. It's like
Yeah.
some conditions may apply. And
Yes.
some conditions, it's like
major.
a major deal.
And it's important to know that. So like, I've talked to Redfin agents, it's important to know because you want to be able to defend yourself. Like
Right.
you are yourself as a realtor, think of yourself as your own little brick and mortar store. You represent you have to advertise yourself. And if you're up against a competitor that's charging less, you want to explain to them why they're charging less and how that's not really is the clearest picture, just like Matt has to do as a lender. Yeah.
Then page 4 and 5, a lot of it is just, I don't want to say like basic info, but it's kind of just like checking stuff off. Just some disclosures. Go through a couple of them. Negative amortization is a big one. So that means that when you actually are paying your principal and interest, the principal is being paid down, right? It's not an interest only loan. Any partial payments. So if you ever get into kind of like a little bit of a hunch, will the lender actually accept a partial payment? Move that loan off there. And then you have the numbers that everyone really should look at, but I feel like it's over. The total of your payments. So if you're buying a $200,000 house, you're obviously not paying $200,000 for it. I think people see that number and don't want to look at it.
They don't.
It's like, holy crap.
They do go over at the closing table, the loan amortization
Yeah.
schedule, which is every payment in total of what
Yeah.
they're paying over the 30 years.
Yeah. And then the amount that's financed, the finance charge, so the actual interest number, the amount of interest you're paying. And then you do actually get the total interest percentage, which again, a lot of people probably don't want to see because it's like, holy
Yeah,
crap. But we do.
that's a big number.
It's a big.
I never look at that. I don't think I ever want
It's
to
a big
again.
number. And then just any contact info for, this is generally going to be who's servicing your loan. That way you have that contact information. And then confirm receipt. All right, so moving away from disclosures, going lender versus broker. A lender is the actual financial institution that is directly loaning the borrower money. A broker is someone like me who is helping potential buyers shop for the best mortgage program based on their qualifications and help guide them through the mortgage process. Okay, I say that because I really feel like when I'm on the phone with people, they think I'm writing the check and signing the numbers to be like, can't you do this? It's like,
No.
like I don't have the power to do that. The lender, for instance, could be a bank. Okay, the lender could also be, we go through United Wholesale Mortgage. They're just a national lender. Like Home Point is another one. They're bigger names throughout. Quicken Loans is technically a lender. And then broker, obviously, is like Premier Mortgage Lending. Was it RSM? Is another big one. People like that.
Yeah.
Right? Then, oh boy. All right, now we're gonna actually get into the actual loan process. How we start, okay, what actually happens in this process. So the application is called the 1003 policy. So, you know, you remember it's a 1003. It's
But
the
we do write into the contract when that has to be done. So when you're writing up an offer, there will be a piece that says, you know, you have to give an application. They're talking about this application. Yeah, so that would be your initial contract to purchase. There's a date in there. So that way a buyer doesn't submit an offer and the seller, you know, says, oh, I don't know when they applied for their mortgage. They could apply in 2 weeks and that's gonna push the whole thing off. You put in the contract up front saying, okay, my client's gonna have it done in 2 days, and then you work with Matt to make sure, hey, my client get
Right.
that stuff done in 2 days.
2
So,
days typical.
I usually do 2 to 3 days.
Okay.
Ish. In this market, I say in process, I think we do. Start that application.
I'll talk myself up. We get it done before. We get it done that day.
Yes.
We'll get it. I'll get their application done for 30, 45 minutes. So
And
it
it's
should be
it's
fast.
better that
It
way
really
if they're
should.
shopping.
Right.
So you can pre-approve somebody.
Yep.
In a day or two.
In a day, same day approval. Yeah. It's,
Yum.
I don't know why it takes people so long. Was it?
Yes, yes,
Yes.
No, reach out to somebody and you're still waiting for a response.
Yeah.
In over 24 hours.
Yeah.
yeah.
So I didn't know if that was normal or not. I was gonna call them after this.
I mean, unfortunately, it is normal, but it should be.
That's why you want to be kind of not, you want to build relationships. Now that we're getting out of COVID, the more networking events you see, definitely attend those, because that's where you meet lenders and you meet people that you drive with. And if you drive with them on a personal level, then you're more than likely it's going to be okay to work with them. Obviously, you know, you want to see how they do. You want to like give them a client, see how they do with it. If they mess it up, you know, that stinks, don't use them again. But if they, you know, are able to kind of keep it together and you go like, okay, I like how the service they provided, you can feel just like anything else, just like an electrician, a plumber, anything else. So you want to work with people that you know can get it done. And having this approval done up front before they start shopping is a major come up for your buyers, because if they're competing with cash or competing against a conventional loan that's putting a little bit more up, but they didn't do the pre-approval process, you can say, oh, my client's already vetted. You know what I mean? They're already vetted, they're pre-approved, they're not just pre-qualified.
Yeah.
Sorry, I didn't hijack.
No,
your
you're
slide.
good. So buyer provides all their financial information. Obviously, you're applying for a loan. I need your assets, credit, debt, income, all very standard there. And then employment history and even address history. Right? At the end, we were asked for supporting documents, 2 years of W-2s, pay stubs, any tax documents. That's mainly for if you're self-employed. If you're not self-employed, we don't need your full tax returns. Your W-2 covers that. And then your government ID, right? That's just for verification that
You are
actually who you say.
Yeah.
I forgot to put on there 2 bank statements, 2 months of bank statements required to make sure you have the actual assets that you say.
And tell your clients to go to the bank to get them, because
Yes,
sometimes
please.
they'll print them online and think, oh, well, I sent them when I printed online. And that's not what they need. They need it from the bank.
Yeah.
So maybe they get them mailed, but most people don't. I just tell them, go to the bank and have them print 2 months.
What if
Takes
they
2
were
seconds.
putting out of the 401?
That is something they probably need additional documentation for, as far as for like a down payment or something. That's fine. I think that
There's
they just need
standard-
more stuff.
There's standards with it, but we just need proof that it's actually, you say you have $300,000 in there. You just need proof.
Yeah. And you'll be working with the lender throughout the whole process, because as far as something like that, like if they need the 401k, you should be communicating with them and the seller. Like I've had situations where someone was pulling out of their 401k for a new construction deal. And as we learned when we were doing the buyers week a couple weeks ago, new construction, you lose your entire deposit if the builder decides, okay, you haven't met this, I haven't got your second deposit yet, I'm keeping this and I'm moving it along, and you've already signed that you're okay with that. So it's important that if it's gonna take longer for the 401k to pull, you talk with Matt, you talk with the seller and say, hey, we need a little bit more time, here's the situation, provide documentation.
So if your institution doesn't have a local office, you can't download it from their website. You have to call them up and say, mail me.
You could probably not
You
say
can-
mail, you could say, could you email me a copy? If
Yeah.
they don't have a local thing, you could just say, it just needs to come from the bank, because it's different than what you're printing online. It is. You wouldn't think it is. You know, I learned that doing my own mortgage. I gave them printed statements and they were like, no, lady. You need
It's
to go
good
to the
enough
bank.
for the IRS.
Yeah.
I download it from the IRS.
I know, for whatever
Right.
reason, I mean,
Sometimes
they do look different when you get them from the bank.
Sometimes they do accept it if you print as a PDF.
Yeah.
And send me the whole thing. Sometimes they will accept that. It's so hit or miss.
I try to
don't know
just
why it's
say,
different.
go to the
That's
bank,
not
whatever's gonna make the process easier for your client. I just say, just to forego any confusion, go right to the bank. It will literally take you 5 minutes and then just send it over to them. I even offer to scan, like if you don't have time to scan, bring them to me, or I'll go meet you. I've picked up stuff at work, drove into their office, picked it up, scanned it, sent it to them, like whatever. Your job is to facilitate and get whatever Matt needs, whatever the attorney needs, whatever your client needs to get the deal done. And when you're working with a lender, you know, Matt is a new lender. As he develops and grows, he'll have potential buyers that he can give you, but he's not going to give them to an agent that's, you know, gone, not answering the phone, not willing to do that extra stuff. You want to be on point, not only for your clients, but for your network, because that's how you get referral business too. You want to make sure, like, I literally drove to Quincy twice to pick up a check for my client instead of having to mail it. Just because I could, I had the time, I was like, I'm going to do it. I knew that you also want to read the seller. The seller's anxious. They don't want to wait for a check in the mail. Sometimes they give you a hard time about it. I'm just driving there and I'm getting it because I'm not going to make, that's my job. It's my job to prioritize whatever I need to do. That's why as a realtor, it can get frustrating because you're like trying to have a cookout and then this person's like, hey, where's the check? And it's like, oh, it's in the mail. Well, that's not going to work. Now can you cancel the check? I'm going to go pick one up, you know? So that's something you've got to have to accept as part of the job, but you'll see long-term gain because of it.
And it's the same on our end, right? We need to be up to speed on our end and constantly be by our phone and available for clients, because if we're not doing our job, Sarah looks bad. You guys look bad.
It's also
Because
just,
they think
yeah.
that we are interconnected, but they see us as the same.
And that's how you compete too. When people are like, oh, well, Citizens Bank's gonna, you know, help me out. It's like, well, does Citizens Bank work on Saturday and Sunday and after 5? Because if you're at work during the day and you can't get any of this done, how is this gonna work? You know, like they're not available to you like they should be, especially it's not cheap to buy a house. It's not cheap. Like our commission isn't cheap. You know, it's like that's part of why we like real estate. You get paid nicely when you deliver. So you want to make sure that you're providing a service that is, you know, deserving of that. And anyone that you have in your network, you want to make sure like I could count on him. You know, he's going to go the extra mile. Even just like I've never done a deal with Matt, but even just him coming here with it like this, prepared. I've talked to him several times. Like I know I would definitely, I've already sent him somebody. So if they choose, that's another thing. You want to have like an array of people that can support your clientele.
So after the application, important to go over pre-approval versus pre-qualification. We kind of mentioned the pre-approval a little bit. Pre-qualification is the amount a lender estimates you can qualify for. There's no credit being pulled or any real in-depth look at the borrower's financial situation. It's a phone call saying, how much do you make? How much debt do you have? What do you think your credit score is? Okay, this is your pre-qual. Okay, that's why a pre-approval is way better in the eyes of a seller, because a pre-approval, you're actually applying, you're submitting your documents. We are actually analyzing your financial state essentially. And when you're pre-approved for a specific amount, the borrower knows the lender will actually lend to that dollar amount.
And I think at this point, it's just subject to the property and title. And stuff
Yes.
Like that. Okay.
Yes, exactly. Especially like FHA loans, stuff like that, you need to make sure it's actually approved.
And as far as the pre-qualification goes, it's good for when you have buyers that are on the cusp of just kind of getting going and they're not sure, I don't know if I want to buy, am I going to sign my lease again? It's like, go get pre-qualified. If you feel like that number is like, okay, maybe I could work with it, go through the pre-approval process. You know, it kind of lets them know you want to have like a delicate pressure. You don't want to be like, you should be doing this, but like hey, if you've considered, here's Matt, talk with him. He can pre-qualify you. If you're comfortable after you get pre-qualified and you think, okay, I could give this a shot, go for it. You know, what do you have to lose? And then they buy a house.
It's funny because if you tell like people a pre-qualification number, that's a little higher than what they're expecting. Immediately, they're like, well, I want to.
Now I want to know.
Yeah, like I kind
Now I
of
want to know. And people are usually surprised. I think a lot of people underestimate, you know, what there is required to buy. Like they think, oh, well, if I'm not making, you know, over 6 figures a year, I can't buy a house. That's just not the case. And it's really what you want to buy. Like you want to kind of tailor it to like, okay, maybe this person pre-qualified for 250 and they thought they were going to get 350. If they're feeling like, oh, but I really don't want to be renting anymore. Talk with them about a condo. Why don't you get a condo? Try to get a condo. And then from there, you know, you can rent it and borrow against it to buy something else or whatever you want to do. But that's a whole other, we can do a whole other thing on that.
All right, so they're pre-approved, found a house, offer gets accepted, everyone's happy. From there, I tighten up their application. I make sure this is all on my end. You guys don't have to do anything about this, but I'm tightening up their application from my end and I'm locking their interest rate. Especially now, if you got an offer accepted, you probably put a pretty fast closing date.
Yes.
So I lock their interest rate for 30 days. What locking the interest rate means is it's paying to hold the interest rate at a specific number for a set period of days. Okay, so I said I locked for 30 days. That's the most common time. And I said, put air quotes around paying because it should be free if you're recording them correctly. Right? This is where Quicken Loans and Rocket Mortgage come into play. When you see Quicken Loans say we have 15 or 30-year rates, would say 30-year rates at 1.99, that's because they are paying 2 points to get that loan down that low. So if it's a $500,000 loan, they're paying $10,000 to get a 1.99 interest rate. But they can get away with it because they put subject.
Yeah,
That's where
Who's
the
paying that?
the
the
buyer.
buyer.
So
they're
you
paying
can
more.
pay to bring down your interest rate. You can pay points.
So that's what they get
If you
charged
really
points.
want to.
And
Right. But
that does happen when you have buyers that, like, sometimes salespeople will, I've had salespeople that have been on the buyer side for that overstated their income. And in that situation, they may have to pay a little bit more to get their interest rate down to make the loan work. So that can be a situation where it's not ideal, but if they have to do it to keep the loan together and they really want to buy the house and they are able to, that's a way to kind of keep things together.
And you can even go the other way. You can get a higher interest rate. and
Yeah.
Credit you at closing.
I think that's what I was thinking
So
too.
that-
That's the
right.
thing too.
And I have a buyer right now that's doing that. He doesn't want to pay closing costs like everyone else. So I'm gonna see what I can do for him.
Yeah.
I'm giving him a $2,000 credit at closing. He's going from a 2.15 to a 2.3. Doesn't seem like that big of a difference for people. So then he gets $2,000 off for closing. That's
But he's paying 1.5% over 30 years for that $2,000, isn't he?
what do you mean?
Like to pay off the $2,000.
He's paying.
Well, he's giving him a credit.
I'm giving him a credit.
But his interest rate on the loan is higher.
Yep.
So that doesn't.
That's why I don't.
Sometimes people don't have the cash.
Yeah.
So if they don't have the cash and they still want to get into the house, long-term, they may be paying a little bit more, but if they don't have the cash to deal, that's like the only way to fix it. You know what I mean? If they don't have the extra $2,000, especially if you're a first-time home buyer, you're having to pay to compete. You want to put at least 5% down. 5% down doesn't seem like that much, but it's a lot of money, especially when you're not taking it from equity from another property. And then on top of that, say that's, $30,000 or $40,000 for 5% down. And then you have to pay another $10,000 for closing costs and you only have 8. That situation is where you would take it because you need to make up the difference because you don't have the cash. So you're definitely paying interest on it long-term, but it's a resolution to an issue if people don't have cash.
Which is why I don't push people. to
No.
Credit or to buy points. I say it's an option.
It's also
Want
one of
to,
the only
but-
reprieves we have right now because sellers won't, most of the time at this point, won't pay closing costs because they have other options. So it's really the only reprieve you have for even sometimes, like, for lack of a better term, stuff happens. I want to use a different word. Stuff happens and maybe they had to pay $2,000. What if they're like, we got a dog. I have a $2,000 vet bill once or twice in my life, stuff like that happens and they have to use the money or, it happens. I've had buyers not able to buy because they decided to lend money to people. So that stuff happens too. You never know. But there was something I wanted to add something. Oh, the interest rate. So that's something you also want to communicate with the lender about because sometimes, again, to compete in this market, buyers are having to say, well, when do you want to close, seller? I've submitted at least 3 offers in the last month saying, whenever they want to close, whatever is going to make this more competitive, let me know. They name the closing date. And sometimes they need time to find a house to buy. So then they're a buyer and that's going to take forever. So I have a deal now that I put together probably 3 weeks ago. It's not going to close till the middle of July. So if I had Matt lock that rate in and then it expired, my client would have to pay more money to relock the rate. So that's just something you want to communicate with the lender about too. Like, hey, we were originally thinking of a 30-day close. Now it's going to be more like 60 or 45 so that they're aware.
And on that one, Sarah, so what did you do with that? Did you extend the lower rate?
As far as the lock rate, that's another thing where I like stay in my lane. I have no idea what they do. I just know that I have to tell them. I just know that I have
Tell
to
you
tell
what,
them.
there's a button on my portal that says lock.
Yep.
Click.
There you go.
I swear to God, that's it. It's literally just click. They see the interest rate that's there. My lender holds it.
Yeah, and you may also get calls from your clients to say like, oh, well, Matt wants me to lock in this rate. Is this okay? And that's when I might say, oh, I gotta call Matt because, I don't know. How long does he want to lock it? Is it gonna be 30 days? Because I don't know if we're gonna close in 30 days.
Well, I'm hearing that from the time the offer is accepted, it's 30 to 45 days to close, and he's locking it in for 30 days. What happens in those extra 15 days?
Right now, 45 days, like if I submitted an offer for a 45-day close without talking to the client, to the seller side about like what their plans were, they may say, why 45 days? I've actually had that happen to me because before, I would say probably like 3 years ago, 45-day close was normal. This was like what we were doing. It was like, okay, 45 days, like when I'm doing the contract, that's what I'm doing. And then just like a light switch, things changed and I submitted an offer and they said, I like your offer, but why are we closing in 45 days? Why can't your lender do 30?
Okay.
And now it's 30 is the new norm. So that's,
In general, though, if it goes past the 30 days.
that's why you got to communicate with them.
You could bump the interest rate up.
It's not really, it's not a matter of wanting to bump the interest rate up. He has no interest in wanting to bump the interest rate up.
Right.
That's something I'll go over right now too, actually.
Yeah,
The interest rate is not determined by me. It's not even determined by my lender. It's determined, my lender uses the 10-year treasury bond.
Okay.
Completely out of their control on where the interest rate is going.
Mhm.
That's why when people say, well, should I wait to lock? I stay out of that.
that's,
I'm like,
yeah,
that is completely up to you because I couldn't tell you if they're going up and down. I
exactly.
could not, it's essentially just gambling at that point, whether or not you want to wait, which is why I would generally lock. And if they say, hey, we don't want to lock, I'm like, okay. So
And as far as,
Could
like-
you lock longer than 30 days?
I can lock longer than 30 days, but again, gonna talk myself up a little bit, we can close loans for 21 to 28 days.
Yeah.
Like it's,
Nothing. What about, as far as a rate lock extension? How does that work?
so if they're, depending on how long it is, let's say it's like 3 days over, we have something called loan officer partner points from our
Oh.
lender that we will use, so you don't have to pay.
Oh, see, so those are things that I had no idea about, but this is why it's important to get to know a lender.
Yeah.
So there's, oh, sorry.
No, that's okay. So like assuming we go back to how it was 3 years ago, where it was like 45 days or whatever. And 30 days was up because of that. Would you just like, okay, this lock is over and now you go into the new lock that
Essentially,
whatever
yeah.
the new rate
It can
is?
cost the buyer money though. I don't know specifically
It
what
can,
it
it
costs.
can cost the buyer money if they want to hold the same rate that they
Yeah.
just held. So if they wanted to hold a 2.2 and the rates now are 2.4, it's gonna cost them to lock
To
that.
keep
If they
that.
want to just say, okay, I'll lock the 2.4, so I don't want it to move, generally won't cost them anything, because that's like the prime rate. That is the rate for the thing.
The, oh, I forgot I was gonna add something, but I forgot. You know, the space.
Sorry.
No, don't be.
Alright, so we lock the rate, obviously house is under contract. I'm submitting the loan to underwriting, right? Once I submit that loan to underwriting, that's when the loan estimate is, the loan estimate's already been signed before that, so I'm not submitting their loan before they sign off on the loan estimate. Okay, and then the application obviously should be perfect, because we don't want to deal with issues in underwriting. Once accepted or denied, there are usually conditions that go along with it. Okay, it's very normal for a buyer to have to provide further documents. I don't usually collect their homeowner's insurance right away, just pre-approving them. I don't usually collect any title that they have, and those are the two biggest ones. Underwriting always wants to see a home insurance binder, and they want to see some title paperwork to make sure the title has been clean for 12 months. So if you have buyers that are freaking out because they get an email saying you're approved, but you need these 3 conditions, you're approved.
Mhm.
We just need those conditions. Unless it's your income, like the income's not matching up, we need to verify. It's like, oh, that's when a red flag comes up on my end,
Yeah.
because then I did something wrong. No, it's not good.
Does
There's
this happen within 3 days?
The 3
No,
days-
that's as far as the CD goes.
right, so
That's
the
something
CD
different.
hasn't been out yet.
Okay.
So this
CD
is prior
hasn't
to
been out
that. This is also something that you wanna, like, as far as him getting that letter saying, oh, okay, you're approved with the condition. You wanna make sure that you're well versed in what those conditions can be, and if you're unsure, talk to the lender, because the seller is, if you say, okay, you know, it's important to send the approval letter by the financing date, because then your client's deposit is covered. So at that point, it's saying, okay, you know, financing date is tomorrow, 6/10, for instance, on this deal I have in Lawrence. And the lender's already emailed me saying that they need an extension. Now I'm trying to find out on the seller side, just so that if you're on the buyer side, what you're gonna be dealing with is me saying, hey, oh, well, what, you know, conditions are remaining? Because I'm not just gonna extend this for my client and have them, you know, on the hook for another, what could turn into a 60-day closing period, and then they miss their seller window in the summer. Because when you list the house in September, October, it's not gonna be the same as listing it in the summer. Even honestly, before the 4th of July, that's a whole other thing. But this is something that you wanna definitely work closely with the lender on and get a letter. And if you're unsure of what conditions are remaining or what they mean, just call and ask them, because they don't expect you to know everything. You know, just ask them like, hey, what the hell does this condition mean? So I can tell my client or whatever, you know? And usually like appraisal will be one of them, because appraisers are taking a long time to turn stuff around. Just because there's an insane need for them. I don't know what other common ones are. Usually like the day of, they have to check your employment day of, no?
Yeah, usually verification of employment is a big one.
There's normal
Making
conditions to
sure-
see and then abnormal.
So let's say you buy a house now and your closing date is in July, they're gonna wanna see that you just made your June mortgage payment.
Mhm.
Little things like that
Yeah,
is what usually will pop up. Again, if I did my job correctly, that's what will pop up. It's
yeah,
things that I look at, I'm like, all right, they're
yeah.
gonna be fine, my process is just gonna get that.
But if you lose your job,
Whew, you better hope they don't call.
Yeah, pretty much. Yeah, that's where it gets-
That's why real estate's so fun.
Yeah, that's where it gets fun. That's
Hey,
where-
people die too. That's happened. If someone passes away in the middle of a transaction, like, how do you deal with that? You know, there's the things where real estate's all fun and games and it has this big connotation of being like, oh, like I'm so, badass because I sold real estate and I'm closing deals, but like it's real life situations with families that you're working with. These are families that are going through stuff. These are families that are excited about things, unhappy about things, divorces, deaths, like you kind of get an array of it and you want to cater to that emotional side of things and kind of be kind because it's a very stressful process. Even when it's a happy one, it's stressful.
So from there, documents are provided, underwriter gives us clear to close. Once the clear to close, or CTC is another, we'll usually say CTC, closing disclosure of the CD goes out at that point. Okay, so again, application, offer gets accepted, lock the rate, then I submit the loan, and then we're clear to close. Okay, so just to kind of follow on through there, and it can be a.
And
be
will
a
the
lot of
submitting,
steps.
from the submitting, see this dash, this is where you're gonna hear from your clients the most, from when they submit the loan to when they're clear to close. Because they'll be like, well, I submitted it, have you heard anything? Am I clear? Are we clear to close? What's going on? So that's when they think, usually they'll be like, I think everything's good. Hopefully they don't come back
How
with
long
something
does it
else
24 hours.
a day.
Minor.
Man, you're fast.
Yeah,
Sometimes
I
it takes
actually
a while.
got yesterday, submitted a loan at 10 a.m., heard back at 12:30. Approved conditions.
Wonderful.
Like, now that depends on
The client.
the client, right? So that depends, like, his debt to income was like 8%, made a lot of money. Like,
Yeah.
there was no reason for the loan not to get approved. So they probably literally, I could see that they just looked at it and were like, yeah, that
You
sounds
learn
good.
the most.
Right?
You learn the most from the harder buyers, as the
Yes.
story when we did that whole negotiating class, like you have a harder buyer. That's usually the people that are calling you like, okay, they submitted my loan. Like, do you think they're gonna need anything else? Cause usually they need to provide more because they have more to explain.
Right.
That's essentially what they're doing is explaining their situation to Matt, and Matt's like, I'm gonna explain this to an underwriter and hope we get through.
All right, so then from there, we have closing, they're clear to close, so then they sign the CD, and then 3 days or more later, they can close. This is done differently state to state, so if you are licensed in Mass and New Hampshire, you may have experienced this. Massachusetts requires you to have an attorney on hand to complete the closing. I do still believe you can use a title company, but the attorney can handle title as well. So if you don't want to go through a title company in Mass, you technically don't have to. In New Hampshire is the complete opposite. The closing happens entirely through a closing company. They have their attorney on hand.
This is the buyer has.
This is, yes, the buyer has to have one for Massachusetts. We use like the same 3 closing companies. They're all roughly honestly the same.
Well, you want to make sure you have a good one because sometimes you have a bad one. I've had an issue where we had a title issue, a major title issue, and my client ended up having to get a new attorney because they were charging her like insane amount, and to the point where, okay, this is going to affect my ability to buy. And now I don't know if this title issue is going to be an issue, but this had previously been sold and previously received title insurance. So we were able to find somebody else that was willing to insure her. So that's something that you also have to, again, like I work with a different lender occasionally and she'll let me pick the title company because I'm a brat. No, but you want to make sure that when you find somebody like Quicksilver Title is a great title company. And they have attorneys, they will close anywhere, anytime. If you want them to come here, I've had them close at the house. I've had them close at a Dunkin' Donuts on the side of the road because one of my buyers slept through closing. That's a real life story. Slept through closing. He worked nights, came home, fell asleep, snoozed through closing. And he was a very anxious buyer. And I was like, is this happening? Is he not showing up? Is this my life right now? Is this what's going on? But he woke up and we found him and he was getting, I don't know, we couldn't stay there any longer. The seller's like, I'm not letting you in here. We were closing at the property. He's like, I'm not letting you in because I don't know if this guy's gonna close. I'm gonna have to relist the property. And it was a flipper. So he really didn't care. And It's important that you have a good title company, just
Do
like it's
you,
important you have a good
do
lender.
you deal with like, explain to them title insurance at all?
Not really. I
Okay.
mean, title insurance, I always just say get it. People will
Yeah.
try, like, they're like, it's like, I don't know, it's like $250 or something. I don't know. It's not that much. I see, I'm making up numbers.
Yeah.
Whatever it is, it's worth it. It's whatever you can advise your client, it's always worth
Buyers
it.
always freak out over it, because it all depends on the value of the house. Obviously,
Okay.
the more expensive house,
See, I'm making
the
stuff.
higher title insurance is. If you, to put an example, if you have like a $300,000 house, you're probably looking at like $600 for title insurance, $600-700. And everyone's like, well, why am I paying that? That doesn't seem like I'm actually paying for anything. If there's a lien on the house, if there's judgments on the house, if there's anything on the title, they're clear. They don't have to pay it, they don't have to do anything.
And if they didn't have that title insurance, it would take years and cost tens of thousands of
Is
dollars.
that recorded anywhere? Because I bought my house 35 years ago, and I hate to say this in front of these people. I don't remember if I have title insurance.
You can check. I don't know.
Who would I check?
I would
Whoever-
guess the town, though.
Yeah, the town probably.
Yeah, I would say the town would probably have record of it. Because the town, like, the title covers situations where, if, like, for instance, in my specific title issue situation, somebody, it was a flipped home, someone purchased it, they probably paid cash, I don't know if they did pay for title insurance, I can't remember what the situation was, but it had previously been sold with no issue. And then they flipped the house, and it turns out that there was like, some 2 or 3 open probate cases, which is like, someone died, and then they have to track down any potential heirs to this property, which, if you can imagine, costs a lot, takes time. And if you're involving an attorney in time, it's going to result in a lot of money, because when you talk to an attorney, if you're calling for your client, they set a timer, and every minute that you spend, your client's getting charged. And sometimes you'll have your clients ask you, I have clients that are engineers, they read everything. They read absolutely everything. And if they said you were on the phone with the attorney for, 25 minutes and it cost me this much money, you better be willing to say, well, I had to because X, Y, and Z. So you want to kind of think of it that way. If you're in a situation where you're dealing with probate, they're going to be paying a lot of money. And then it could result if they don't get the house anymore. It's not theirs. It belongs to somebody else.
And Sarah, so if it were a situation, say you have the title insurance and a situation came up, there was a lien on the property, are you stopped from closing?
Yes.
Oh, you are?
Yes.
Oh, okay.
So that's where the attorneys get involved. That's where, we could do, and I can arrange for it, an entire, class on title. Cause that is like, there's so many problems that can come up, and they're so vast, and they're really for an attorney to handle.
Yes.
You do whatever you can, again, just like any other situation. I try to think of us as like, we wrap everything up and we make it look nice and, send it on its way.
Yeah.
When it comes to the title issue I had, I just said, who do you need me to call? What do you need me to do? Do you need me to chase people down? Do you need me to talk to the prior owner? And that's what I did. I tracked down the prior owner. I talked to them. I connected them to the attorney. This attorney wasn't willing to get title, so I found a different attorney that was willing to get title. You have to be willing to that's where your value comes in. It's like, okay, I might not know how to fix it, but I'm gonna figure it out. And if I can't, that I did everything I could to try and figure it out. So in that situation, we were able to close, but my client had to accept that she was going to be chasing the probate situation. So that was something that the attorney and her worked out. So these situations are just, it's a case by case thing. It's really an attorney's thing to handle, but that's why title insurance is invaluable. Just pay whatever the hell it is, because it will cost you significantly less than if you have a title issue on your
And
home.
can I just ask one
Yep,
more thing? So in New Hampshire, the closing happens entirely through a closing company.
Yep.
I've always encouraged my New Hampshire people to use a lawyer, to
Yeah.
use an attorney, and I think it's wise. Do the closing companies have like an in-house attorney?
Yes, yeah,
Oh, they
Yeah.
do?
yeah, so there's no attorney on hand.
Okay.
It's almost just like built into the fees.
I think you have to be an attorney to carry title insurance.
You must.
Or something. I'm
You
pretty sure.
must.
That's something I should definitely know. But that, as far as New Hampshire goes, if you find a title company that you like, I use a title company for both Mass and New Hampshire.
Okay.
If I'm on the seller side of things, I may encourage, if you want your own representation, here's a couple of attorneys I know. A lot of the times, it's the closing attorney, whoever the closing attorney is. Sometimes the lender chooses, sometimes the lender will give you an option and say, hey, do you have anyone you want to work with? Does your client have anyone they want to work with? But not every attorney carries title insurance. So like Tony Popolo, who was with us last week, he doesn't carry title insurance. So he'll do the contracts and then refer out for the title. So that's stuff that like they deal with on their end, they maneuver it there on their end, but that's not something that, I wish I knew more about it. I'll learn.
And I will actually gonna go back here because it's pretty relevant. We can't get a clear to close until the appraisal comes in. So that's where when people are like, oh my God, the appraisals are nightmares, that's why, 'cause it's affecting a lot of closing dates. From what I understand is that as long as you have an approved loan or approved financing by your buyer's commitment date or finance date, they're fine, right? Now, that doesn't mean that clear the house, but they could get their rate deposit back.
Yeah.
Right, so, and I literally just learned that last week, because I'm about to run into the situation where we're cutting it pretty close, and I was like, oh my, they put down 60 grand as a security deposit, I was like having a heart attack, because I thought they were gonna lose $60,000, because the appraisal set to come in the day before, so it's like, holy crap.
Yeah.
And it's probably not gonna come in the day before, it's probably gonna be late, like they always have been.
Mhm.
But that's important to know, that just because you don't have the appraisal in by the finance date, as long as they are approved, there's money, it's
Safe.
generally speaking.
That's why it's
safe.
important to get
Right.
that letter with the conditions listed.
Yeah.
Because then if you've sent them that letter and they've said, okay, we're good, they can request an extension on their end. You know, the seller can say, oh, well, I'm not cool with this until the appraisal's in, and we can say, well, then we need an extension. And that's a whole other different situation, but
Right.
that's something that you definitely want to stay on top of, because if you don't get that letter to them in time, and then you say, oh, the appraisal didn't come in, or, something came up, they can challenge you. I do think that finance, and that's again where you would say, hey, attorney, you need an attorney, you need to come deal with this. But if it comes down to like a challenge on the financing contingency, I think as long as you have a conditional approval, you're good. It doesn't always, again, like I talked about with the buyer's week, it doesn't always mean that they're gonna listen. Nothing is stopping somebody from breaking a contract and going out anyway. You know what I mean? Like they could say, nope, I don't want to anymore. And then you have two people that are fighting and disagreeing. And that's where the attorneys come in and court comes in and it gets yucky. You always want to do what you can to prevent that. And that's kind of where I see my role as, like, all right, I kind of just want to ease everything, talk to the attorneys, try and get everyone to kind of like agree, but it's your job to kind of make sure that these dates are paid attention to. Because again, if you have $60,000 and you didn't get them the letter, they can say, oh, well, I'm keeping this and I'm putting my house back on the market.
Yeah. And I was having,
Mhm.
I didn't sleep. I literally thought I was like,
Sweat.
all right, now the fun topic that everyone I'm sure is wondering is closing costs.
Oh, and you're definitely gonna get 8,000 questions on closing costs with every client you have. Yeah.
So I break them, and a lot of other brokers break them into three big categories. One is the brokerage fees, two is gonna be your prepaid items, and three is gonna be your escrows, right? When I'm quoting somebody on closing costs, generally, I'm giving them my brokerage fees, right? Because the reason for that is they don't need to set up an escrow account. Now, I'll ask them, are you setting up an escrow account with us? If they say yes, then I give them obviously all of that number. I don't just hold on to that
Yeah.
and say surprise. But they're not required to set up escrow, so I'm just gonna give them the escrow for right away. If they want that escrow account in. But there's three numbers there, and that's where that cash to close number and closing cost number may differ a little bit. So brokerage fees is now broken into three more categories. You have origination charges, you have services you can shop for, and services you can't shop for. So very complex terminology. Origination charges is always just going to be underwriting fees and your buy down points that we talked about. If you want to pay money to get a lower interest rate, that's where that would be. Okay. You may have lenders that have origination fee in there. Okay, for us, my boss pays me. Buyer doesn't pay me, so they don't have that cost there. So that may be something else that's paid there as well. For services you can shop for, it is generally title. That's the biggest thing there. Any title fee, the title insurance, even just the title company, they are allowed to shop for it. We can't force them to pick any closing or title company. Services you can't shop for, but generally appraisal fees, a credit report fee, any sort of flood certification, tax service fees, stuff that we are handling on our end so like we have our own credit report agency. Obviously we go through a certain appraisal company for our appraiser, they charge us a certain amount. We're just charging that to the buyer. Is there any questions on that? I want to make sure that closing just makes sense there.
I had one, but I forget.
Isn't there, is it for the seller in Mass pays stamps? I'm always confused on that. The stamps and it's contingent on, and I think in New Hampshire, they split it, buyer and seller split it. More or less.
The tax stamps? So the tax stamps, as far as that goes in New Hampshire, they just tend to be higher. As far as the cost of the buyer and seller split, I'm really not sure, other than the broker fee, which is for us, you know, for the realtor. I know that the seller usually takes responsibility for that, which I'm sure you're aware of. But as far as what's split, I'm not really sure.
See, I thought the tax stamps, the Mass, the seller paid them all, but in the New Hampshire transaction, buyer
So-
and seller split.
So New Hampshire, they don't split, they both pay.
Okay.
So they both pay that, and that's where that transfer tax comes in. So the
Okay.
transfer tax is in the prepaid items, which. will be-
Tax-free New Hampshire, guys.
Yeah, tax-free, yeah, they
Just kidding.
they kind of hide it a little bit, so here, I'll go,
So they both pay the same amount.
Yep.
So basically, New Hampshire gets paid twice for that.
Yep.
In Massachusetts, it's just the sellers.
I think it's prorated.
I think
no?
it's per, yeah, it is.
So
'cause
they'll pay
that's
for
why
it
it's-
down to the day. And then
Yeah.
the, I think the buyer pays upfront for a month or whatever.
Yeah, I
No.
would say they're clear on that.
Right.
Yeah.
Right, so now we got prepaids, two big items, because obviously we're mass transfer taxes, just kind of filling in for New Hampshire, but prepaid interest. A lot of people don't think about that. If you buy the house in the 15th of the month, you owe half of the month in interest, right? And then 1 year of homeowners insurance, another thing that a lot of people don't think of, you have to pay 1 year upfront for your homeowners insurance. This is also where transfer tax would be, and transfer tax is $7.50 for every $1,000 of house that you buy.
Mhm.
Right? And
That's a
both-
lot.
What is it?
That's a lot.
That's a lot. It can creep up on people faster than people want to think
Yeah.
about. Because you can't roll into the loan, it's just, you
Gotta
owe
pay it.
that, buyer and seller owe that right away.
That's New Hampshire now.
That's just New Hampshire, yes,
Okay.
yes. Yeah, Mass doesn't. it's like-
Yeah, pretty sure Mass is prorated down to the day.
Right,
Same with the water and all of that.
right. Then we have escrows, right? This is the one that people do not know about. And when I say
I'm
that-
learning just as you're explaining, because I'm like, I don't know. I always just make them talk to the lender.
So this is definitely one that people don't think of and they just don't know. This also differs state to state. So in Mass, we collect 3 to 4 months of taxes and insurance. Okay, I will always quote them on 4 months because sometimes we do need to collect 4 months. Sometimes we need to collect 3 months. I'd rather over quote you than under quote you, especially when it comes to taxes and insurance like $3,000. I don't wanna.
And it's, so you over and then you.
You can credit back.
Yep. Yeah, exactly. So in the loan estimate, it would say 4 months. Closing disclosure, we find out, oh, we only need 3 months. Okay, that's when that comes in.
What a nice little present you give them.
Yeah,
You know,
it's
it's a
nice.
nice little rainbow in there.
And then there's New Hampshire, and then there's,
Yes,
Yeah.
exactly, exactly.
and then there's New Hampshire. This is where closing adds up, is 6 to 7 months of taxes and insurance. And taxes are already hiked in New Hampshire, right? So you're looking at like 8 to 9 grand there. Just right away, right there. Yeah, so that's where, again, that's where the New Hampshire closing costs, like Sarah said.
Definitely
before,
higher.
People were like, holy crap.
Yeah.
And who pays that, the buyer?
Buyer, yep, buyer pays that.
So if you're looking at a first-time home buyer that's looking in New Hampshire, they not only have to come up with their down payment, but they have to come up with the closing costs that are gonna be significantly more than if they were buying in Mass. However, it's more realistic that in New Hampshire, they would find something affordable. Because in Mass, it's so inflated.
Right.
New Hampshire's getting there though, especially with the Tuscan market going village situation. It's getting insane.
Salem's getting insane.
I just got outbid by a house that literally looked like I walked into 1985. It was a ranch, 1,400 square feet, went on for $389. We offered $410 and we didn't get it. So, and that is like very tiny, and that's like right by Canopy Lake. So obviously some areas in New Hampshire are getting inflated just like anywhere else. We're seeing people come from New York and New Jersey, moving into like the White Mountain area. That's gonna create some inflation, but it still rings true that if you have a buyer that can't buy in Mass, they can probably find something in New Hampshire if they're flexible on location. But you wanna prepare them, that they're gonna be buying a lot of closing
They're
costs.
paying more closing costs
Yeah.
than probably expect.
You can maybe sometimes work with the seller, you know, depending on the location, the interest, how long the house has been on the market. stuff that comes up at home inspection, you can work towards getting some of that covered. But in this market, it's, if you're competing on a house that just came on and there's a ton of, interest on it, don't even entertain it, because it will just realistically more than likely just qualify their offer.
And can I ask, does this apply even to people who pay cash, or is this all for people who are borrowing?
I think it's just borrowing.
Just borrowing, but if you're paying cash, you still owe taxes and insurance. So you could
Okay.
still start an escrow account with a lender.
Okay, so you
So
just,
you have that choice. Just like if you're financing, you have the choice to start this up.
So who would have the escrow account if there's no lender?
If there's no lender, you wouldn't have an escrow.
okay, so, but you'd still have to pay that,
And the attorneys would probably prepare that,
okay.
so on some end. I don't really know. That's a
So
good
let's
question.
say I call, I say, hey, you want to set up an escrow account? And they ask, what's an escrow account? I say, well, this, when we hold your taxes and insurance in an account with a lender, so you don't get the tax bill, and they say, no, I'm all set. They don't owe this. They don't owe it because you're not starting this up
Okay.
at closing.
So you'll just pay it at closing, or
So
You'll just pay it over the
you just
67
pay it
months
over
because you're
the
not
6
borrowing
months.
any
so you
money.
don't have to put it up front?
You don't have
No.
to put it up front.
So it's only if they're borrowing money that they have to pay that.
Okay.
No, sorry.
No,
It's
it's
okay.
fine.
So they're paying cash.
Yeah.
And they're like, okay, I still owe taxes and insurance on this.
Yeah.
And I want to start an escrow. I guess it would depend on the state, but you can either go to an attorney or you can go to a lender and say, hey, I want to start up an escrow account, and technically at closing, depending on your state, you would owe this. If you say, no, I don't want to start the escrow,
Yeah.
I'm gonna save the money myself,
Yeah.
you don't need to pay that.
Yeah.
And then you just pay it like month by month after you get
Or
it.
quarterly or whatever.
Right.
Some people
So
do
that-
elect to do that.
So that's why these differ. New Hampshire collects taxes twice a year, Mass collects taxes quarterly. That's where we're getting these numbers
Okay,
from.
so those are real estate taxes?
Yeah, I think. Yeah.
Taxes, oh yes, I'm sorry, yes, property taxes, yes,
Yeah,
yes.
the reason I asked, just, I say by coincidence, but my demographic seems to be old people. And
Yeah.
so most of mine.
Right.
Girl,
Yeah,
get it.
most of
What?
mine-
got a
So
lot of
it's-
cash buys.
Because just yesterday, I had a call from a prospective seller, and he was asking me all about closing costs. And I just didn't-
Right. Right, so yeah, it all depends. If
That would
they-
probably be definitely a case by case situation,
it-
because I'm really not sure.
Especially with cash.
Yeah.
It's completely
Yeah.
case by case.
Right.
And that's where hopefully you have that broker, that lender that can be like, hey, even if like they're not gonna work with them, like, hey, what's the situation?
Yeah,
Like,
exactly.
what is, so then that way you can tell them, okay, like this is what I'm hearing, and not saying, oh, you don't know anything, and they get to the
Yes.
closing and they're like, oh, like,
Yeah.
I'm assuming if they can buy a house in cash, they're probably not working.
I've also had a cash buyer roll up with a personal check too, which was fun, because they can't pay with personal check. As if you work with cash, they just showed up with this checkbook, and they were like, well, we can't take this check because we don't know if it's gonna bounce. I think they ended up taking it though, surprisingly.
I think it's very good.
Yeah, surprisingly, I think they ended up taking it, but it's definitely that happens.
Yeah, and really, that's it for
Wow,
for
very
closing,
good.
right? Just those three big things there.
This is recorded. right?
Oh, yeah. I definitely want to find out more about the cash though, because I don't know. That was a good question.
And then I didn't put a slide on it, but the last thing I do want to mention is the appraisal. And kind of just go over that. We have no affiliation with the appraiser, with the appraiser company, with anything to do with the appraiser. We order it through a third party, and the third party hires the appraiser, right? Which is why, like, to go back to that finance or commitment date, if you say, hey, everything's in line but the appraisal, generally you're going to, again, I want to say this tentatively, generally you're going to be okay, because they understand that that's out of anyone's control other than the appraisal company that's not.
And they're usually made aware of it
Yeah.
ahead of time from the listing side of things. Their agent should probably be letting them know, like, hey, if there's an appraisal contingency, it's taking a little bit longer. But as far as the appraisal goes, I'm finding more and more that they'll tell you, ask you right up front, are you gonna waive this? It gets to the point where now, like, if you're keeping an appraisal and an inspection contingency, it's very hard to get your offer accepted. Unless you have an overpriced listing.
And then there's cases where, I don't know if you run into it with a buyer yet, but if you put 20% or more down, you could actually get your appraiser
Waived.
waived by your lender.
Yeah.
So now you're as good as a cash offer. weather's good.
Yeah.
Or brokers good.
Yeah.
Because you get closed in 2 weeks less, which is the whole advantage of cash.
You want to
Because
read
it's
your
fast.
client though, because sometimes they'll be like, well, why would you want me to do?
Right.
You want to read kind of how they are. Like if they're kind of like, I just want to buy, I have the money, I'm not concerned, like, let's go, whatever it's going to take. I have buyers like that. They're like, send it, whatever. Then we can do that. And then we can do that. But there are some people where if I said, how would you feel about waiving the appraisal because you're putting 20% down? They'd be like, I can't believe you would ask me that. You know, like, no way, I'm not doing that.
And I wish it was something from our end that we could find out.
Yeah.
Because, I mean, we can run findings on it and we can say at that moment, yep, they'll waive it, but things change.
Yeah.
And if a week later offers accepted and something happens and then you put a 2-week closing, now we're gonna get the appraisal waived and all of a sudden it's, oh, we need the appraisal.
Yeah.
That's where things go.
Yeah.
Um,
It should take 2 weeks.
It should take 2 weeks or less. You can
Yeah.
Put a rush on it, kind of rush it in that sense, but again, we don't know who the appraiser is, so I can't call the appraiser and be like, hey, man, like, can we get this?
And when you
going?"
meet with them, they tell you, you know, like I just had an appraisal on Monday. And when I met with her, she said, I reject 20 appraisals a week because she is just like us, you know, like they're just like realtors, just like lenders. They make their own schedule, they do their own thing. And she's like, I have a granddaughter and a daughter and I'm overwhelmed and I just want to spend time with them and I help take care of them. And so I'm rejecting them. So there's also, they're highly overwhelmed because of the refis and just how busy the market is. Because obviously it's necessary for a refi. Now I'm finding they're setting to prioritize, like for a little while, they weren't prioritizing the difference between a sale and a refi, which obviously if you're selling, it's going to be a lot more time sensitive than a refi. So that's gotten a little bit better. And for a while, I think they brought in regulation that made like desktop appraisals okay. And now they're or they brought in funding or something happened where they were trying to alleviate the stress and they were doing desktop appraisals. But then desktop appraisals were coming in really low. It was becoming an issue there.
Well,
So
there's like drive-by appraisals.
yes, they'll drive by and
You
take a
really
look.
just appraise a $700,000 house by driving by.
Yeah. Sometimes, yeah. Yeah, they'll
They
just,
made one came
Drive
and
by.
they said this is way too high, and another one came and they said the same thing. My
Right.
house appraised for $250,000 more than we bought.
yeah, wow.
Right.
We got a steal.
Right.
Yeah.
I mean, we had to like got the whole thing.
Right.
Yeah, but still.
But
Whatever,
still.
but still.
Yeah. And it can become an issue with the seller side of things. This is obviously buyer 101, but when you're on the seller side of things, it can become an issue because they're like, well, they didn't even come to my house. But if you can see the comps and see that it's fair, you know what I mean? You can generally tell when you look at the appraisal, if you get an opportunity, they don't always give it to you. Usually if you don't hear about it, great, I don't want to hear about it. If you're hearing about the appraisal, it's usually not good.
No.
So if they're willing to share their report with you, you can kind of navigate it with your clients on either side. Just give I've also had appraisals challenged where I had one bank send an appraisal out, it appraised out. Same property where the guy slept through the closing. It appraised out, everything was fine. And then the bank, which was a big bank, it's Bank of America, came and sent a second appraisal because they didn't like that it appraised out. And then it came in lower. And then I'm in this position of having to say, my client doesn't want to pay more than what the house is worth. And the seller can say, oh, well, we had an appraisal that came in. So what are you talking about? You know, it's not our fault that the bank did a second appraisal. So this is situations that you'll find yourself in when it comes to that.
How do they get
They reduced the price. Yeah. They reduced the price. I'm also very nice until I'm not. So not that I'm not nice, but it takes you're representing somebody in what they want. You don't have to agree with it, but if they want it, you have to do what you can to get it while remaining respectful. You know, you can say, you know, respectfully, no, I'm not gonna. I always use the analogy when I'm in that position to the agent. I say, you know, if you're gonna show me a car and tell me it's worth 8,000 and ask me to pay 12, I'm not gonna buy it. It's the same thing here. Obviously, you want to check with your buyer first because sometimes buyers are okay with it. Sometimes buyers are like, well, I really want this house and I got the extra money. I'll put the extra 5 or 10 up. I don't care. But you want to be careful because sometimes it's not, you know, 5 or 10. Sometimes it's like 20 or 25. And sometimes they meet in the middle. Like I had a one come in low on my listing. If we listed it at 550, I had the conversation up front that I thought the listing was a little too high. The appraisal came in at 544 and we had accepted an offer at 565. My client was enraged. He thought that he was being robbed. You know, I had to do the job of kind of having to talk him down. And the buyer actually came and met him and paid him $555. So he kind of met him halfway. Not every buyer is gonna be willing to do that. So if you're in a situation where the buyer is a first-time home buyer and doesn't have the cash, you have to say, my buyer doesn't have the cash to do this. So if you wanna put your house on the market, back on the market, and explain that your house is only worth 544 and you want 565 for it, you know, good luck finding a buyer, because even if they do have cash, that's a big difference. And not everyone, just because they have the money doesn't mean that they've lost their sense. You know, you're not gonna buy something that for more than what it's worth, essentially, especially at the peak of a market where things are already pretty inflated. We don't know if this inflation is gonna stay. We don't know when the market's gonna neutralize. These are things that you wanna have conversations about. And sometimes it means the deal doesn't come together. And that's a very real part of this job, is you could work for 60, 90 days on something if it gets extended long enough, and it can completely fall apart. You know, I've had buyers in a moving truck moved out of their home when had the whole transaction fall apart.
Are you serious?
I have, and that's why it's important to know who your lender is. You know, this is when I was first getting into real estate. This was a friend of mine. And, you know, I come from a real estate family, which, you know, is great because I'm able to get, you know, guidance from my parents, and, you know, my siblings are all in real estate, but I also don't always necessarily agree with who they choose to work with. And when you're new, you kind of just go with whoever. And I was kind of just going with the flow, and had a loan fall apart 3 days before closing, and I never used that lender again. Because I'm having to, you know, lend my friend money, you know, like they're in a moving truck, I have to talk to, they're trying to talk to their landlord for them, trying to explain the situation. So this stuff happens that you want to be prepared for. It's not always pretty.
So how did you argue the point where, you know, you had an appraisal contingency, they got an appraisal,
Mhm.
and then later on, the second appraisal, you know.
Came back low.
What's your argument? Because the seller would say, if I were a seller, I'd say, look, you had an appraisal contingency, we got an appraisal. What did you say to that?
You can only really say, you know, I understand. Period. I understand. However, my client feels that the second appraisal is fair. They don't have the money to make up the difference. So unless you want to reintroduce your property to the market, and it also depends on timing.
And they could keep the down payment, but that's.
No, because if they're didn't appraise out and they're not putting a lot down, their financing can't come together. So that also is a big factor in it. Is okay, well, yeah, okay, there's people that can have the property not appraised out and still buy it,
So
but
it's
most
financing
can't.
contingency that was there.
Stays in there. And I'm having more and more agents ask me, you didn't write anything about appraisal. And it's like, I don't have to. It's covered. It's covered in here. It's covered under financing. You need to get a denial letter from the lender. You know, that's a situation that is worst case. You also want to, you know, it depends on the needs. It depends on the timing. Like this particular situation, we were at the end of the summer. So I knew as you get into real estate longer, like, okay, yeah, sure. You know, you're a flipper. You want to get your money. It was a flip. So I know you want to get your turnaround as soon as possible. You probably already have something that you've purchased and need the money for. You're probably already on to the next deal. So I know that it's in your best interest to just get this sold as soon as possible. And if it's a difference between realistically 5-10 grand to it's peanuts, like it's really not that much money to them. So it's like, okay, well, if you want to go ahead, introduce your house back into the market, this guy already has a place to live. I can just go find him something else to buy. And you can go find someone that can afford, you know, you can explain the situation to a new buyer and see what they want to do.
How difficult is it? If you got a moving van with everybody's furniture and the deal doesn't go through. Does the moving van say, well, we gotta unload the stuff because we have another job to go to, or how does, you know, how?
Well, luckily I was in a U-Haul that they rented, so it was good. I didn't have to worry about any Ubers or anything like that. But in that situation, you kind of just have to learn as you go. It's similar to like the situation I talked about the other day when my client wasn't moved out of the home, you know, in time for closing. Like these are all things that you're like, okay, you know, with time you learn. And if you're ever in a situation, that's why we have people like Jamie and people in the office to rely on, and, you know, the ALC and all these people, you know, to say like, hey, I've never been in this situation. What do I do? You know,
So-
can you help me? Can you help me brainstorm? You
So
know,
is it foreseeable that you would have to rent a storage unit?
you're not on the hook for anything. You know, you're not on the hook for that, because you also at that point you are also mourning the fact that you just worked really, really hard on a transaction that you're not going to get paid for, because you don't get paid. You know, it's like, it's that simple. So as far as if my clients were in a moving van and the moving people are like, hey, I got to get out of here, you know, it's situational. It's situational. I would probably, in my circumstances, if I could swing it, I would say I'll pay for another hour or another day. You know, I'll take care of that for you, because these people are
What I'm
homeless.
just saying is with the, other than a U-Haul situation, you know, Allied or Mayflower, will they say, well, you just pay us for another day to keep the stuff in the truck?
It's situational. It's situational. That's something you'd kind of have to navigate as a camp. Hopefully you're never in that spot. We hope to fix it before it gets there. Usually most are fixable. That's only happened to me one time. Clearly, I shared with you some of my nightmare transactions. I have a lot more to share, but there's in that, yeah, in that particular situation though, it's really situational and you really have to rely on your guidance. Like when I was dealing with that transaction we talked about that was going to fall apart at the closing table, we needed a holdback, buyer kept changing their mind about the holdback agreement. I was in Sarah Gerda's office. I mean, I was just kind of taking a second, you know, does anyone have any ideas over here for me to fix this? I'm like in my sweatpants, helping my clients move. So you kind of have to rely on the people around you, but have faith in yourself because you're an asset and you'll figure it out. And you can always ask me in my nightmares.
One of my colleagues just had somebody at the closing table, well, they were supposed to close at 2. They were doing the final walkthrough at 1, and there was issues at the final walkthrough. So they didn't tell him. So he was at the closing, he's both kind of just sitting there, they're like, where are they? Like, he's not answering their texts. The buyer's not answering a lot of his texts. So he's like, okay, what's happening? So he calls them, and it was like something like the ceiling was like a little, like not the actual structure, like the drywall was like a little chipped in one area. And the loan officer was like, don't make me lose this deal.
You have to be
On the
reasonable.
last day of the month, because something a little different than what you saw. It's like, oh my God.
And that's where your guidance comes in key because these people really, they don't know what is the norm and what's not. So like I've had clients be enraged because somebody left hangers in the closet. And you have to say, let's be reasonable here. They're hangers. You want me to take them? I'll take them. I'll put them in my car and now they're gone. Like you have to try to like coach your client into, like what's realistic, what's the norm, and if it's abnormal, it's your job to say, we're not closing. Like, this is not going to be done in time. Or like that situation with the buyer's agent that I had, that was so like, we'll do a holdback agreement, we'll work it out. But those are situations that again are situational.
But in situations where they complain about the hanger story I shared last week, are they typically looking for some cash?
It depends. Sometimes people are just, it's highly emotional process for people. So sometimes people are looking for cash and sometimes people are just
so stressed out.
They're just pissed and they're just, this is the one thing that sent them, and you kind of have to reel them back in. Like, I know you're frustrated. I understand this may be unexpected, but this is not abnormal. And that's why I like to set the expectation. Again, this is all about our role really relies on, not everyone's expectations can be set, but you want to do your job to be able to say, remember when I told you what was normal at a walkthrough and what's not? This is normal. You know what I mean? Like I try to have those conversations up front because I'm finding more and more buyers are saying, can I see the property before, especially if there's inspection items that need to be taken care of. It's like, yes, absolutely. It's normal if we do it like a couple of days ahead of time to see some of their stuff in there. If there's anything abnormal, I'll be sure to let you know. So if they don't hear from me that it's abnormal, most of my clients are okay with it because I've built a relationship with them where they trust me. But where you're newer agent, you're having to prove yourself. If you're concerned about what does a walkthrough look like, ask me, ask Jamie, ask anybody, and they'll be able to tell you, like some chip paint's not abnormal. Some nails in the walls, not abnormal. Some chipping on the ceilings, not abnormal. If you walk in and someone's still living there, that's abnormal. Like that's not cool. Like we might have to push closing or like, hey, the basement's flooded and there was no disclosure about that. We're getting a lot of rain today, or oh, there's a leak in the ceiling we didn't see inspection. Those are all things that are like, all right, we're gonna talk about if we're gonna close, and if we do close, what are we gonna arrange to fix this situation? And I try to just say most problems are fixable. As long as their lending is good, most problems are fixable. Because at that point in the game, the seller doesn't want to start over. You have to have incredibly, what's the word? Anal seller to want to start over. Yeah, exactly. I'm trying to find nice words. You want to try to kind of just.
We're real.
I know. I'm reading recorded though, so.
But that is where it's important for no matter what, just being upfront with people.
Yeah, and
Right?
setting the expectation.
Even on my end, there's things where buyers come to me that they love a house that's $500,000. They haven't been pre-approved yet, and I have to be like, look, just because you like this house at $500,000 doesn't mean you're going to be pre-approved.
Yeah.
At $500,000.
Yeah.
And then at least that way, you don't just say, oh yeah, we could do that, and you take it on, and they're pre-approved for 400, and then they're like, well, you said we could do this, and now you're not wrong, but you probably should have said, hey, or we can't do it. Or like, I don't know if we can do It's like-
And that's why the home buyer seminar that we had started the week off with is a good way to educate buyers and get them. Because it's like, okay, I'm giving you all this information. It's free. There's no obligation whatsoever. They're just more prone to ask you questions because you're already giving them the information up front. And my first step to any client is you need to talk to a lender. You know, don't go showing houses to people that aren't at minimum pre-qualified. Because if you're showing them houses and then they're like, I don't know, I'm just tire kicking, you know, I don't know. You'll learn in time to like read people. Like if they're not like after the third, fourth, if showing any interest whatsoever, send them to a couple of open houses. You know, yes, you run the risk of what if they find another agent, but like you want to be confident in your ability of like, I'm a good agent. I know what I bring to the table. Even though I'm new, I have a team of people behind me that can absolutely get things done for me. You just have to be confident. And that's conveyed even if you don't feel confident when you do something like a home buyer seminar. Because you're like, hey, I'm confident enough to stand up here and get poked and prodded about all these questions about real estate and hope that you'll gain some trust in my knowledge. And if you were to do something like that, you can ask like a seasoned agent or a seasoned lender to come and guide you, because I know a little bit about lending, just like he knows a little bit about real estate. You know a little bit about what your client's going through so that you can correctly guide them. And that's why it's important to know about these steps, because you are going to be their first call every single time. Because when you're looking at houses, you just develop a more personal rapport with them. You're face to face with them a lot more frequently than Matt would be. Matt might be with them once or twice.
I've probably seen them once.
Maybe, you know what I mean? Like I have clients that don't even go to meet the lender. They're just like, cool, you sent me this lender.
And
That's
honestly,
great.
I meet them at the closing table.
Yeah.
So like.
And not every
it's like
lender
at
goes to the closing
it's like
table.
at the very end, and it's like 10-15 minutes, like
Yeah.
pop in, give them a little gift, say,
That's
like,
it.
at least introduce yourself. So
Yeah.
They know who just
Hey, it's
got them a
me.
mortgage.
Yeah.
And it's not just like, oh, like I worked with Matt, but I never met him. I don't
Yeah.
know, couldn't tell you the first thing about him. Like,
Yeah, and when you do the home buyer seminars, it's just kind of it sets expectation up front. And I always like to just be as transparent as possible, even with the ugly stuff, because you don't ever want them to be blindsided. A blindsided agent I would say it's like a horse that's gonna buck you, like, you know, like a blindsided buyer. You know, they're not gonna be happy about it because they're already highly stressed. Like, especially like I deal with a lot of pregnant people because it's a lot of times they're like outgrowing their homes. Like there's a lot of pregnant people that are buying, and that is like highly emotional in itself. I've been pregnant, it sucks. Like it's like I don't want to be doing this. I can't take anyone's stuff right now. Like I'm gonna lose it. So like that's the kind of people that you're having to work with. You don't want them to be blindsided by something. But I wanted to talk a little bit too, while I have you here, about like what the VA requirements and FHA requirements are for water and, oh God, what's the other one? They don't have any requirements for septic.
So septic, I think septic's more mass.
In
It's like
mass, they do Title V.
Right?
But as far as I know that for FHA to qualify, you have to have an FHA water test. And like, I didn't know that when I first got into real estate. So I would like get an FHA person, someone with a well, and I would think, oh, whatever, like, do I need a water test? And the inspection company actually said, is this an FHA loan? And I said, yeah. And they're like, okay, so we're gonna do an FHA water panel. And I'm like, what? What's that? And that costs them extra money up front. You know, to do an FHA water test means their home inspection's gonna cost more money.
Right.
So I don't know if you know about like what those
So,
requirements are.
I don't know.
Or if that's the appraising side of
So
things.
that is more so when our lender says the house is FHA approved, the water test is fine, all that's already fine.
Okay,
They've already gone through all that
Yeah.
to tell me that.
yeah,
So we don't deal with like each
Individuals.
individual one, so I wish I could speak on
No,
that.
that's
but,
fine. It's something that you guys are definitely gonna need to be prepared for though, as far as
Yeah.
like that goes, as far as VA and FHA
It's good
goes.
just to know that there's different inspection processes for VA and FHA convention, like they're all different.
And you need to know ahead of
appraisal
time, so you don't show them a
processes.
house that they can't buy. Because that is the most frustrating. Like if you show someone the house and it's like, wait a second, I don't think you were here for this, but I had a transaction almost fall apart on a VA loan because the well kept testing for coliform, I think it is. And they bleached the well, and then there was who's paying for the well to be bleached, because it's your loan, but it's your house, you know, it was a new construction house, the well had been sitting. The buyer wasn't spooked by it because he had enough knowledge to know like this is just because no one's living in that house. But the bank doesn't care if the buyer doesn't care. The bank cares about if this is a requirement to get a VA loan. So if this isn't doing it, we're not closing.
And that's why I think a VA loan too has such a bad.
It does.
stigma to it Because of all that.
It's
But
sad.
If you actually look at the VA loan, especially from my end.
I was gonna say that. I didn't know how easy it was.
It's an unbelievable loan for veterans. Like,
Yeah.
I would have them go VA over conventional any day of the week.
Yeah.
It's just, there's just a stigma around it for some, it's just a little bit extra.
I think
things
it's
you
the
have to
hoops
do.
that they have to jump through and they have
Right.
other options right now.
Right.
When it becomes more neutral, when we see a lot more listings and we see significantly less buyers, those FH, like when I first started in real estate, like having an FHA loan was like 80% of buyers had FHA loans. It was like, whatever, I don't, like, it's fine, it's just an FHA loan. Oh, you need closing costs covered, no problem. We'll just ask, we'll throw that right in the offer. We'll get 5,000 back at closing. Now, totally different. It's totally different. If you're an FHA buyer buying under 400, I try to give them the talk without completely discouraging them of like, this might be a little difficult. You want to just prepare yourself, here's some things you can do to be more competitive. What's your situation? Can you wait? Because
And that's
I
what
try to
goes
be
back
honest.
Trusting yourself.
yeah,
Trusting and being upfront, being like, that you gave them that info, that they're perceiving it as you're looking out for their best interests, and they're not gonna go elsewhere.
yeah,
Because the same thing with me, if they have a 620 credit score, yeah, they can get an FHA loan. But I'm gonna say, okay, unless you absolutely have to move, this is where I think you should go.
yeah, if you can
And
wait.
it's trusting yourself that you just gave them knowledge, you showed them, hey, this is how much money you could save by waiting 2 months and paying off $800 of your credit cards. You're
Yeah.
hoping that
That
you
will
go
leave
there.
there. Yeah,
And I guess that's something I should mention too, was that we can essentially see how they can get their score high.
that's what I was gonna say. So
Right.
I send clients to a lender, even if they're like, I don't know if I can buy, I'm like, talk to a lender,
Yeah.
because even if you can't, they know what you need to do
Right.
in order to do it,
Our-
and maybe how much time it will take.
Our credit bureau, we have wayfinders, what if simulators, and we can plug and play everything.
Mhm.
And it'll show, it's like 90% likely in 2 months, if they do this, their score is gonna go up. So versus having them do that now, having them pay for a rescore just to get them a house now, you say, hey, if you're willing to wait, it's gonna cost you $800, which you're gonna have to pay down anyway, because you don't wanna hold your credit cards for that long.
Mhm.
And you could get a house, this is now your mortgage insurance, this is what your payment's gonna be, like, this is what you're gonna save, and then you hope that they actually perceive that as a good thing, not as
And
he's
it's all
trying to
in-
push me away.
You run their credit at that point and.
So I have,
And
right,
then you have to run it again, like in 2 months. I've heard that
Yep.
if you run your credit
Certain
too
amount of times.
frequently, then it ends up bringing down your credit score.
Yeah.
don't worry about
Okay.
that.
They also do like, you
Okay.
can like, you can pay something off and then pay for a rapid rescore, so that they can see, like, sometimes if you're in a gym and it's like one thing, they might say like, can you pay this off? We'll do a rapid rescore and you should be okay.
Right.
But that's not for everybody. That could be, you don't want to have someone that's like has way too much debt, be constantly trying to rapid rescore, and then they spent all this money they didn't need to. Because I've had a lender say, like, I've had a buyer say, well, what if I pay off my car? I can pay off my car. And the lender was like, well, don't do that, because I don't know if that's really gonna keep the loan together. And then you just spent all this money you didn't need to spend. So even if your buyers, and it's all about how you deliver it, because there are agents that are out there that will say, you can't buy right now. That's disrespectful. You know what I mean? Like, that's rude. It's not, you want to be warm and inviting, and like, yeah, to me, I really see my job as facilitating people's goals. Homeownership is the biggest goal. It's a game changer in the trajectory of a family's life. If you're working with people, and I've worked with people, it's really beautiful to see someone whose family never in their entire generationally has never owned a home. They buy a home for the first time. It's like incredible. It's an incredible feeling. You're going to change their life forever and their kids' lives forever. So you really want to look at it as like, I'm really trying to facilitate people in reaching those goals. And as nerdy and real estate nerdy as it may sound, I really love my job because of that. I love the people that are like just buying by the cusp, because it's a lot of work, but it's so rewarding. Like, these people are working, like clawing their way into a better place, and you're helping them do that. So you want to deliver it in a way that's like, listen, I'm so down to get you a house. We can absolutely do it. Talk to a lender though, because if right now is not the right time, you don't want to do it now. And then if God forbid you're in a jam, I have to sell your house and I can't get your money back. I don't want to be in that situation ever. So talk to a lender and go with what they think you should do. That's where you want to have like warm, nice, inviting conversations, because some realtors, in my opinion, can get too big for their britches and just say, no, you can't buy, or I don't take small loans, or whatever. And that's fine, whatever, but refer them out if you don't want to. If you don't have the time, like I have a 2-year-old, sometimes if I know someone that's shopping at 250 and realistically the location that they absolutely have to live in because their kids, I'm not gonna be able to find them something, if they're adamant about it, I'll just say, listen, let me refer you to my sister-in-law. She's absolutely amazing. You can, she has time. I don't always have time. You got 3 boys. Like if you got someone that you can't, it's time, it's going to take time, but you really want to deliver it in such a way that prioritizes their goal of buying a home and not just say, oh, no, you can't do that. Because yeah, you might be thinking like, oh God, there's no way, but you want to, someday they will. And maybe you never know, like you never know who has like a rich uncle or aunt, you help this one person that got help from their family to buy a house, and then you could be, getting referrals from that family for the rest of your career. So it's also just something where you want to work with a lender that's willing to do that. Because not every lender is like on a bigger bank. They're not willing to they're like, no,
Right.
stamp, no, you can't get it.
It's funny, because right away, I'll be able to tell right with the initial phone call that I have.
Yeah.
When I say, okay, just basic, like, what's your income? What are your salary, are you hourly, are you self-employed, like, what do you think your credit score is? Those 3 questions, because generally people will know, I'll be able to tell right away.
Mhm.
And then it's one of those things where if one of those is off, I say, okay, like, this may be hard. Like this may be challenging for us to get you a loan. I just want to put that out front versus being like, oh, we got you. Yeah, this is gonna be easy.
Yeah.
Like you don't want to
'Cause-
put that false perception in people. It's great.
And I've worked with lenders that do that. And then you end up in a situation where your client's 3 days out from closing, living in a van. So no, not living in a van, but she had to go back to her landlord, get back into her situation there. And that is where whatever network you build matters. So I'm sure that with COVID, Jamie's great. I'm sure we'll have more and more networking events, more things where we're having, people from within the industry, not just realtors around. And where you're new in this, go to those, mingle with people, find people you jive with. Because again, if I don't have the answer, I have to be comfortable with the people I'm working with to ask. And if you're not comfortable with a lender that you feel like maybe has their nose up in the air, or they just don't have the time to allocate to helping you, then it's just not going to be a good fit. It's really just a matter of fit. So Matt fits well.
And then there's one thing too, where based off that, actually, I just brought that up. Premier now has a class where we're kind of rolling it out, we're kind of in the beginning stages of rolling it out. It's already accredited, we're kind of testing it out on ourselves essentially, where it's about marketing yourself, the difference between marketing and advertising yourself, and goal setting, and actually setting expectations for yourself. It's like a full 2-hour accredited class that we're actually working on right now. So we'll be rolling that out. So hopefully I'll see you guys soon with that.
And is that something you would offer here or?
Oh, no, so it would be Zoom / kind of like how we're doing here. I would come in and then we'd have to do Zooming. It's like, it's just, we want to provide you guys the opportunity.
Oh, you have that free media stuff too. No?
Yeah.
Oh,
yeah.
sure.
Yeah, so we want to provide you guys the opportunity to grow your business, because the way we see it is if your business is growing, our business is growing, right? So we understand that the industry for the last, 5, 10, 15 years has just been like lenders just like, give me business. And then it's like really not much in return for you guys. You're helping us grow our business. And then it's like, okay, thanks. Like,
Well, a realtor is usually the first point of contact. When you
Right.
think I want to buy a house, I'm going to talk to a realtor,
Right.
but in reality, it's the lender. So there's a lot more referral business to the lender than there is lender to the realtor.
Right, and how we're kind of compensating for that is we now have a full media team that is completely free for all of our real estate partners, where we can market your listings, so we can get videography on all your listings. We have like agent spotlights that are coming soon for properties. We have like podcasts, we can have you come on and just introduce yourself so people can actually know who you are personally, you're not just the picture on Zillow that I see, right? There's actually a personal connection to that. And like I said, we have, we're gonna be rolling out classes for you guys, again, completely free. We just come in 2-3 hours of your time and hopefully give you some value that can help you grow as realtors, not just.
And all of these classes are beneficial because you'd be surprised what you need to get through a deal. Like I used to work in payroll, and because I knew payroll, I was able to salvage a deal in Saugus because my client had taken a bunch of unpaid time because she was a contractor. She didn't realize she had PTO. And I knew that you could do like a way basically for the company on her end to give her a gross payment for the PTO that she hadn't received. And it was like, she was one of those cusp buyers, and the company agreed to do, I talked to the lender was like, oh my God, let me go, I'm gonna call her. And she did it and the loan closed. So you'd be surprised, this little knowledge that you pick up in classes and just from your life experience will pay off when you're in these random very strange situations.
Right, just like with that class, it's like probably things that you never thought of, like there's this new thing called geofencing on YouTube where
Oh, yeah.
you make a quick YouTube ad. It costs little to nothing per view, and you put your geofence in Andover, and everyone in the Andover area that's looking at real estate videos will see your advertising.
Mhm.
And I mean, it's cheap relative to what you're getting, especially.
Yeah.
So it's like little things like that we could make the ad for you. Right?
Well, it's
You
also
use our
awkward
team
when
to
you're
make the
first,
ad.
yeah, when you're first getting into real estate, it's awkward to put yourself out there, you know, it's kind of like, I don't want to be that annoying person, that's like, I sell real estate now,
Right.
but like, I sell real estate now, so, but I will say, one of the first trainings that I ever took, which took me like a year or two to even pay for a training to do, because I was very much of the, oh, well, it'll be fine, like, I can just figure it out, my parents are realtors, everything's fine. And I took the training, it was Brian Buffini training, and the first thing they say is don't be a secret agent, have conversations, put yourself out there. And if you feel uncomfortable doing that, partnering with someone like Matt, who maybe has done a few transactions if you've done none, and putting yourself out there in a way that's like he's presenting it makes it a little bit easier, you know, and just you having any free resource like that is huge, because otherwise you'd be paying for that.
You got to pay for a lot.
Yeah, we do. Yes, it's intense.
That's one thing I realized when I
Yeah.
first came in, how much real estate agents actually paid for like their listings and stuff.
Oh, yeah. I actually, yeah, I have a listing coming in Methuen, and it'll probably, that's another reason why I think it can get tough on the listing side of things where people want to be. I've also come up, sorry, this is unrelated. I don't know if anyone here, like, you've done some transactions. People keep asking me when I'm on the listing side, are you splitting your commission 50-50 with me? It's a very strange question to hear. Yes, and I can't really talk more about it because Andy Consoli's antitrust laws are friggin' fuming in my head. But that's a weird question. But you do end up paying for a lot. Like, I think for photography and some drone footage, because the neighborhood's really nice, I think it's gonna be like $350, and then I'll pay to advertise it. You know, I'll probably, you just do a lot. Think of an open house. Oh yeah, I would like if people want it.
Yes.
If they're gonna do a listing, so if we're gonna do like a listings 101, like sellers 101, it's definitely, I think, beneficial, especially because they're hard to come by now. But when you do get them, and when you get the opportunity to get in front of people, you don't want to lose it. You know.
And another thing to just kind of relate to that, I guess it's a little bit on the side. I'm kind of intrigued by, I think, older people who don't know how it works. Then I remember like this one couple I met last weekend. They built their house in 1992. That was almost 40 years ago.
Yeah.
Very, very nice, very direct, which I appreciated.
Yeah.
And he said, so here, what's the story on the commission? What do you charge? And he didn't know that he had to pay the buyer's commission, basically, where it's 5%.
Yeah.
And explain the split. So that's very interesting. And I don't understand that if it's been close to 5 years, what's
No.
back then there weren't 5 years.
Yeah, there was no buyer's agents.
Yeah.
And so it's definitely changed a lot, and it continues to change. Even like I've been in this for 7 years now, and things have changed rapidly since I first started. Rapidly, like
Yeah.
a lot. So, you know, things are gonna continue to change. Yeah, especially from the lending side. Before it would be like, oh, you want a loan for 500,000?
Take it.
Now you have to